Lots of central banking action. We'll have the Bank of England meeting today. We will later today perhaps get a final word on the Fed chair announcement as well. Let's welcome in Jonanthan Schiessl, CIO at Ashburton Investments, to discuss all of this and its implication for market sentiment. Jonanthan, good afternoon. Thanks so much for taking the time to speak with us. I'm going to start with the BOE, Jonanthan. I think everybody's anticipating a rate hike. I think the only question out there would be, what would the language suggest about the future course of Bank of England monetary policy? What are your thoughts, sir?
Yeah, look, I mean, clearly the market is, as you rightly say, expecting some sort of action, which will be quite momentous in itself after such a long period of obviously falling, and then obviously no rate moves. So, yeah, it's the language around inflation, the language around the upcoming ongoing Brexit negotiations, which will provide that uncertainty, which, you know, clearly, I guess the market will be thinking, is this a one-off, or is this now going to be a series of small rate rises for a short period of time? So, yeah, the language is all important.
What did you make of what you heard from the Fed overnight, and more importantly, the name of Jay Powell doing the rounds of being the next Fed chair, Jonathan?
Yeah, look, if I'm really honest, we don't, we've tried not to get too involved in worrying about who might or might not be the next chair. Clearly, there's a huge amount of rumors swirling around, and it seems to change by the week. But yeah, it seems to be building a bit of momentum now. We're not really too focused on that till we know exactly, or have a bit more clarity on who the next Fed governor will be. So, yeah, we don't comment on that particular speculation at the moment.
Okay, let's talk about markets right now. You know, we've seen significant amount of interest coming into the emerging markets over the last couple of months. India particularly has seen, although foreign investment flow has relatively reduced in the last 2 months. How are you feeling about India, both flows and valuations in the Indian markets?
Yeah, so I think clearly, the recapitalization news of a few days back is another step in the right direction, and a very significant one at that. Yes, we do need more information. Yes, there's still other pieces of legislation or action to come. I think from a foreign investor perspective, when we look around the globe, I think it's fairly clear that people still are certainly focused on emerging markets in particular as a group. And emerging markets as a group still, from a valuation perspective, look quite attractive compared to developed markets, and particularly compared to the US. Now, of course, when people actually drill down into the EM space, India still trades relatively expensively. Our view would be, you know, obviously with the flow, as you rightly talk around there, with the heavy domestic flow that we're seeing in India, we wouldn't think that there is a large risk, shall we say, of a derating going to come anytime soon. And obviously with the incremental positives around continuing reform coming through, you know, we think India will just trade expensive for some time. Clearly, we're all waiting for the earnings recovery to kick in. And clearly that's still probably a couple of quarters away. So, yes, the market's certainly expensive. It has been for some time, and we think it will be for some time as well. So, yeah, I think foreign investors are probably, over the last couple of years, haven't really been that active in India. And, you know, I think potentially that could start to change if there is a genuine belief of the investment cycle coming back and earnings finally kicking in.
Jonathan, so, you know, in the scenario that you describe, and that seems like, you know, the view a lot of people are taking on India, do you think that the biggest risk, or perhaps the only risk that one can foresee, is probably more global than domestic, unless, you know, there is an unforeseen, you know, further or continued weakness on the GDP side? Do you think domestically we're sort of steady state from here, and the only risk that could emerge is globally if things start to look nervous for global financial markets for one reason or another?
Absolutely. I think, you know, India tradition for some time, the major risks have been sitting outside India. Of course, you know, we've got local state elections coming up in the next few months. So, you know, there is some element of political risk, but I guess I would agree, it's not a huge risk at this stage. And therefore, yes, if you do get some sort of geopolitical event globally, or, you know, that sparks off a sell-off in US markets and developed markets, there's no doubt that India will take a hit as well. So yes, I would agree with you that the bigger risks today are probably sitting outside of India than inside.
Would you share the same confidence for EM currencies and the rupee perhaps, or would you place your bets on the US dollar?
I think, yeah. So our view, the dollar, has been in a sell-off for a little bit of time. It seems to be trying to recover. I guess the question there is what really is going to happen with US rates, and then it comes back to your point again about the next Fed governor. So we as a house do have quite significant exposures to various emerging market currencies on an unhedged basis. So we actually think there is quite a bit of value sitting in various EM currency plays at the moment.
All right, Jonathan, thanks so much for joining us. Appreciate you taking the time to speak to us about the macro picture and also the India story as it's playing out in the minds of foreign institutional investors.